All right, Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. That blowout jobs reports, sending yields higher, stocks falling sharply. We'll debate the fallout for the market and your money with the investment committee today. We're all at Post 9. Josh Brown, Joe Terranova, Jim Leventhal, Bill Baruch. We'll take you to the markets. Carl just told you what was going on here. Dow's down more than 700, but we're down across the board. Yields are way up. The 10-year and the 30-year, the highest since November of 23. The dollar's up, crude's up. And by the way, Josh, the S&P's gains since Election Day are basically all gone now. Are we now worried that the economy's too hot for stocks?
So I don't worry about that. And one of the recurring themes that I've talked about throughout the course of the last couple of years is that every time the market sells off because the economy is too good, it's a buying opportunity. Go back and look at the last 3 years. That's been the case. We've had these disturbances periodically as a result of, forget inflation, just purely on labor reports, where all of a sudden we'll see the belly of the curve moving a lot, which is what we're seeing today, 3 years up 10 basis points to 443. Or we'll see this moment where wage growth surprises to the upside, or confidence is higher than expected, and they sell stocks off. And I understand the impulse, because a 5% 10-year is real competition for an investor who's got a plan where they only need to make 7 or 8% a year to hit their retirement goals. Why would they want to take more risk? So there is that substitution factor, and I totally get it, and I'm not dismissing the impulse. I'm just telling you it's not a moneymaker. It's wrong. Intermediate term, long term, it's wrong. Now, if you tell me...
It could be a money saver, if you will, in the near term.
For how long,
right?
though?
There's going to be volatility.
For how long, though? Because if the story here... We added 2.2 million jobs last year in total. That's the final reading with all the revisions now, okay? There was this whole narrative starting in the beginning of the year and almost up until the election, which is that every jobs report's going to be the last one, and then the bottom's going to fall out. And it just won't happen. And so you're going to have people trot out seasonality. You're going to have people talk about it's holiday hiring and it's going to go away. Now, we're going to keep doing that. And the bottom line is, if you want to sell stocks because the job market is materially breaking down, that makes more sense to me than I need to sell stocks because the job market's too good. I get that it might be the right trade for the next 10 days. I don't have a crystal ball, neither does anyone else. I just think it's the wrong mentality if you're a long-term investor, and that's what I am. Not talking to the traders, I'm talking to the investors.